What's going on, everybody? This is Travis with the Spoon from Carter Cow Capital. Carter Cow trading on Facebook um, and Instagram. Trade with Travis on YouTube. Hopefully, everybody's doing very well on this Monday morning. Happy Martin Luther King Day. We're doing something at 8 o'clock. We're doing it right when the New York market actually ends up opening up. Typically when we end up doing this, we do this at 7:30. But because we have the day off for his teaching, I wanted to make sure that we could be able to maximize this time and be able to talk to a few more people. So with that being said, let's go ahead and get started. I'm not a CTA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education, and from that education, you can be able to make your own informed decision. I understand that Forex involves risk. It involves risk of being able to make money, also involves risk of being able to lose money. So please keep that in mind. Understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you're going to end up making money today. So give me a quick second as I share, make sure everyone can be able to get inside of the room and be able to ask questions and be able to go from there. Very excited to be able to talk very excited to be able to talk to everyone and show myself onto the screen. What's going on, everyone? Hope everybody's doing very well. As I go through my overall introduction to make sure that I have everybody synced in for being able to view it. I am basically just making sure that all of my links are pretty much set up. So give me a second as I am sharing it to everyone. And this will be very quick, just quick rundown and just making sure that everybody can be able to get onto it, be able to go from there. If you are here, type in hey, type in your name and say where you're from and anything else like that. Very excited to be able to talk to everyone as we get started from here. Almost done. So let's see. That is my business page. Good. And do the last sharing from my personal page. Make sure that I send it to the academy. Okay, good to go. So, all right, there we go. So, good morning. Once again, my name is Travis with the Spoon. I am a Forex trading specialist. Been trading for the last 5 years, and I ended up starting this company with education and mentorship in mind. This is Trade with Travis. This is a 30-minute session. Typically, what we end up doing is looking at some overall economic pairs, seeing if we can be able to find some overall trading opportunities, be able to teach along the way on what I would do when it comes down to being able to trade. Also, being able to teach people or being able to give people opportunities for overall mentorship. Our next mentorship group can end up being actually every webinar day that we end up having this week. If you're interested in being able to go through that, you can go to cartercowcapital.com/start here. I'm actually going to place that inside of the chat box as we start talking. You can also see that in the description, but there it is right there. That is for a daily webinar. But if you are interested in being able to go into our weekly boot camp, in which we're going to end up starting, or which is pretty much at the end of the month each week, which is going to end up being on January 25th to January 29th from 9 p.m. to 10 p.m. It's a live session via Google Meet. If you're interested in being able to learn a little bit more about that, please make sure that you type time in and be able to go from there. But excited to be able to talk to everyone. Thank you for being able to hop in. I do appreciate your overall time. And once again, we're going to end up respecting your time by being able to take a look at some overall trading pairs and see if we can be able to find some overall opportunity to be able to go. So with that being said, let's go ahead and hop onto the charts and let's go ahead and get into it. So starting off with the economic calendar, what happened yesterday? Industrial production ended up coming out. So what does that mean? Nothing really. It just means that the Japanese yen ended up basically saying that we connected on that. I'm gonna refresh my page and see if we can get back into it. Hopefully it didn't stop the video. Stop the video? Good. All right, so pause this and okay. I'm gonna refresh on YouTube. Try that again. There we go. Okay. Once again, sorry about that. Like I was saying before, I'm probably going. Like I was saying before, I'm probably going to end up. I have Wi-Fi in here with a custom PC that's set up for gaming and set up for production, obviously. But the Wi-Fi that I have, either I need to get a range extender or something else like that, because it's not necessarily working as well as I thought it would. I actually just got into actually just purchased 1,000 megabits when it came down to internet speed for its overall being able to get in. So that should make it fast, but I'm not necessarily getting the best out of it. So I'm going to end up working on that a little bit more and trying to figure out what that deal is when it comes down to that. But once I end up figuring out what that is, then obviously we'll be able to go from there. But going back into what I ended up saying, market is going to end up being slow when it comes down to economic news. So what does that mean, and how can we be able to look at this from an overall calendar perspective to see what's going to end up happening? Well, what we end up doing is we end up taking a look at the big three. Now, the big three is the U.S. dollar index. We take a look at oil, and then after that, we take a look at gold. The reason why we look at those three is because we want to figure out what's happening with the overall market. It allows us to be able to see how the market is going to end up moving and what we should be doing for its overall pairs. We look at the U.S. dollar index since March. The market has been basically moving down each and every week, and it's been consecutive. This a down move after down move when it comes down to this. The daily D extension ended up getting hit at 1650 for the overall move, and the weekly D extension is still out there, which is a overall expectation of a number where the market should end up going after a while. With that being said, we talked about if this market ended up breaking this overall purple trend line to the upside, and if we end up getting a move to the upside, we'll probably see that the market will go up to at least 11,770 towards a overall move from there. And that's exactly what ended up happening. We had a broken counter trend line. We talked about that we wanted to be able to get a retest from this overall move. And once we end up getting that retest, then we was interested in being able to trade with the US dollar. Now, you look at it, that's the exact thing that ended up happening. We did not recently just draw this. This is something that was drawn last week. The market ended up breaking out of this counter trend line, retraced, gave us a little bounce right off of this overall counter trend line, and then pushed right back up. So now, what does that mean? That means that the market is short-term bullish towards the dollar. So that means that when we're going into looking at overall pairs, I'm going to look at it by saying, okay, well, what's happening with the U.S. dollar, and which pairs are going to end up allowing us to be able to basically say that the U.S. dollar is going to end up being strong and betting on that overall thought process. So if we're looking at this right now, the 2 hours basically in a no trade zone. Are we going to end up seeing any movement that's going to end up putting us into a good position today for a U.S. dollar movement, at least from the index? Right now, not necessarily. I would like to be able to see if we can be able to get a lower price going into later on today, and then after that, look to be able to buy and then go from there. So essentially what I'm saying is this. I would like to see the market have a little bit of a slower day. The market starts to move back a little bit, get back to some of these lows, and then after that, I want to be able to buy once the market basically breaks that overall counter trend line. Now, if the market keeps on moving without me necessarily getting that opportunity to be able to do it, then I won't look at being able to trade US dollar pairs from that overall position. This means that we missed out on that opportunity and we have to look for another one. Hopefully that makes sense as we go through. Now, the next pair that we end up taking a look at was oil. We end up saying same deal with oil. We expect that oil's finally done push back up to these overall highs and basically back up to where it was in 2015 to 2017. The market is expected over time to be able to go up to $67. Now, is the market going to go to $67 today? No, it's not. The market is going to gradually get there. And I think that it will start to be able to get to that point once we end up seeing that the market will get into somewhere around the months of April when it comes down to that movement. Now, why is that significant? What's going to end up happening in April? Spring break. It's starting the spring. People want to go out. People want to travel. Okay, so adding a real world scenario to it makes a lot of sense when it came down to this movement. Well, think about this. Why did the movement start to make these huge type of movements over the course of the last few weeks? Well, people were traveling to be able to see family when it came down to the holidays, November and December. So once again, that makes a lot of sense. Going into January and going into February, are we going to see a lot of people going out and traveling and doing different things like that? Not necessarily. That's why I think that we're probably going to end up seeing a little bit of consolidation around this area. And once we end up seeing that consolidation around that area, anytime that the market goes below $50 or somewhere around $50 and you can be able to get in, I would love to be able to get in towards this overall area between these numbers, to be able to use that as an opportunity to springboard to be able to buy up to 67.41. We ended up making money on this one before, as this market was moving up to this position before the Christmas break actually ended up ending. Now we're just trying to be a little bit patient, allow the market to be able to dip down just a little bit so we can be able to catch a buy going all the way up towards the overall spot. If we get that, then we have opportunities to be able to make money along that move. I think that makes a lot of sense when it comes down to being able to push up from there. If that makes sense, please type in a Y or yes if you have any questions. Once again, please make sure that you end up asking and sending messages inside of the chat box as we go through it. Okay? Now, that's from the weekly. Let's take a look at it from a daily perspective. Where are we at? Market end up getting into the sell zone. We expect that the market is going to end up dropping down. Does that mean that we necessarily should look to sell? If you're a scalper, maybe. If you're a scalper and you want to scalp down to the $50 mark, then I think that would be a good position to be able to get into if you're just looking at being able to get in and get out of pairs. Do we have a counter trend line break? Yes, we do. Where is the market expected to fall back down to? At least down, if we're looking at where this market end up having a little bit of consolidation over in this area, we're probably going to end up seeing that this market will probably have some of the same movements when it comes down to this overall area again, somewhere around 49, somewhere around there. Probably test this trend line again and then try to push back up. So that's essentially what I'm looking at right now. But oil, not necessarily looking at being able to get in towards a trade. Remember, oil kind of gives a good representation about the Canadian dollar. If you look at the Canadian dollar, we'll probably end up seeing that the Canadian dollar will probably end up having a little bit of slip of a movement when it comes down to that. Okay. Let's take a look at gold. Gold, we are looking to be able to buy. This is something that we're looking to be able to buy, bank profits, get in long term, and be able to go from there. What ended up happening to me yesterday, which really kind of pissed me off as we go through this. We talked about this yellow area when the market. We talked about this overall channel that's happening on the. Go ahead. Okay. We go from a weekly perspective and take a look at what's happening. We can see that this market is having a daily channel toward the downside. We expect that this market, if we're looking at this from a channel perspective, we're expecting that this market will fall a little bit lower before actually going back up. Now, why is this significant? We're looking at stimulus checks and everything else like that. What is that going to do to the effect of the dollar? It's going to cause inflation. If we're talking about inflation, what does that mean towards the value of the dollar? Is the value of the dollar going to end up going up, or is the value of the dollar going to end up going down? The value of the dollar is probably going to end up going down, which means that we're probably going to end up seeing that gold is going to end up going up. Silver is going to go up. Platinum is going to end up going up when it comes down to overall value. So essentially, what I'm looking for long term is this. I want the market to be able to break the counter trend line, break to the upside, or break this overall channel to the upside, retest, stay above it, and then start to push up. Or if I'm not able to get it in that area, I want to look to be able to buy when the market ends up giving us low prices. Now, that low price, if we're looking at a channel perspective, could fall all the way down to the 1694 area, or right around that 1700 area. If it gets all the way in that area, then I would love to be able to buy long term, looking to be able to have the market be able to go up over time. Okay, now, am I holding my breath on that happening? Not really. But if that does happen, then that will be another scenario where I'll be interested in being able to buy for us being able to get in. Currently, right now, we see that this market has basically had a counter trend line break and fell into an actual support area again, where the weekly is in a no trade area when it comes down to overall percentage. So we're not seeing much momentum. But if we look at it from a daily perspective, we can see that we're in a buy zone. So the question is, can we do long-term trading here? I don't think that we can. Can we do scalping here? Possibly. Can we do a little bit of swing trading? Once again, possibly again, because we're basically in the buy zone. So what I would look for from a 2-hour perspective is that, can we get a low price? Once we end up getting a low price, can we get a counter trend line break towards the upside? I got into this market earlier yesterday, literally when the market was right here. When it started making its move up to 1829, I placed my stop loss at 1816. Why did I place my stop loss below 1816? Because that was the swing low at this particular point in time. So I was like, okay, well, if the market ends up hitting this overall swing low, or keeping this as a overall area where we'll be good, then I should be okay. Market immediately dropped to the downside, taking me out of this market. And currently right now, we see that the market is in the sell zone. So anything around the 1820 area, I'm looking to be able to buy. If we do have another counter trend line break and the market starts to push up from there, then after that, I would kind of get in. But once again, now my thought process is that my stop loss has to be below this overall swing low, which is 1800, which means that I really can't risk as much as I did the previous time when being able to get in. Now, where could this market go from an overall perspective, short term? We look at it, we're seeing a little bit of consolidation, but it's not like an actual support level. You see that the market is hovering around this 1825 area, which look at it, the quarter number kind of makes a lot of sense when it comes down to that. I would kind of pay attention to, if you get in, trying to see if you can get in all the way up to 1860 or staying in all the way up to 1860. If you do that, then I think there'll be a solid position for us being able to get out going into this overall week. But if it breaks down below, you just got to keep that in mind. Am I interested in being able to get in right now? No, because the market is in the sell zone and it doesn't make any sense to be able to buy a high price in the sell zone right now. That doesn't make any sense for us being able to get in at all. Okay, so not interested in being able to trade that at this particular. One trading pair that I actually am in, and I ended up getting this from one of my trading buddies. We actually ended up taking a look at this one together. They started talking about a lot of divergence when it came down to this overall pair, which was the Euro Australian dollar. Now, this one, typically we look at only US based pairs, but once again, because it's Martin Luther King Day and don't necessarily have that much reason to be able to stop early if we were trying to get out, we can take a look at it. We can take a look at a few more pairs as we go through. What are we looking at here? The market pushed up to 196. All the way up to 197 for the overall pair. This market ended up having this huge parabolic move toward the upside. The question is that going to end up happening again? Are we looking at a head and shoulders pattern for the overall downside move? Well, if we take a look at this, we can see that the weekly is in a buy zone. And typically what that means is if you end up buying and you stay in over time, that means that you should make some overall income while the market is basically retracing from this overall move. Does this mean to me that I think that the market is going to end up being fully bullish and it's going to end up pushing all the way up to 208 or 206 at this particular point in time? You're talking about another you're talking about 5,000 pips for the overall move to the upside. I just don't see that happening. But I do see that this market could move to previous zones that they were previously in from an overall pair. Because the market is in the buy zone, then that means that there's potential of the market moving up. But we know that the current direction is actually moving to the downside. So that means that we're still in a rough patch on being able to figure out what the opportunity is. Taking a look at it from a daily perspective, what do we see? Market is coming, and the market wasn't in the buy zone, but it was somewhat close. And it's in this overall descending triangle as we look at it. We can see that it's broken out of this descending triangle towards the overall upside. And right now, we're kind of retesting that overall move for us being able to break out. What does that mean? There's buying opportunity here. Okay. What I ended up doing was that we talked about this trading pair for being able to get in right around this overall zone. And we talked about this actually last Monday on being able to get in right around this area. Anywhere around the 156.70 area, 156.50 area for the good position for being able to get in and be able to place your stop loss in a good spot. On Sunday, the market ended up giving you a chance, and when it was at 156.60, 156.70 to be able to get in, then after that, it shot right up with 39 pips for this overall movement. When I ended up taking a look at it, I ended up seeing it right when the market ended up going to that 157 area. I mean, basically 157. So I was able to get in at 157. Not necessarily the greatest number to be able to get in, but currently right now up 18 pips as this market starts to figure out what it's doing. Because this market is getting close to the sell zone, I would kind of wait and see how this market is going to end up reacting forward, moving toward the downside. And then after that, see if we're going to end up getting a push up. If you did not get into this market, don't worry about it. You're going to end up having another opportunity to be able to see what happens. Is the market going to end up staying right around 156.80? Is it going to end up going down to 156.50 again? Or is it going to end up going down below it? I would caution by saying this. If you're trying to take a look at this for as an overall position, if this market falls below this overall low, and then after that has a strong candle towards the overall downside, that would be something that I would really kind of pay attention to and say, okay, well, that's something we may end up seeing a new lower low that may end up happening. This market breaks this overall lower low at 155.89. I think I have my stop loss at 154.95. If it breaks below this, then that means that you have to wait another at least 6 hours for the market to be able to push back up. I'm not interested in being able to see the market fall like that, but I am interested in being able to add on to another trade. I have another entry at 156.50 that never got fulfilled. If it falls down to that position, then I would be interested in being able to buy. Now, what are the positions where I think that the market will go to? Well, let's take a look at these orange lines for us being able to get examples of where this market could go. We looked at it previously. You see that this market ended up hovering right around 163 as the last position of where it ended up having support and resistance at from an overall position. Is this a major pivot? No, not necessarily, but this is a overall number where the market could go. We're looking at this from this spot. There's about 500 pips towards the overall upside. If you remain to be patient, you can be able to get into this early and this basically this hold on this overall pair if you're into long-term trading. If you're not into long-term trading, I will look at a 300 pip move all the way up to 160 and see if this market is going to end up retesting this overall area before actually going up towards the upside. Okay, now, do you believe that this market is going to end up falling to the downside, in which that's what we looked at it from a daily perspective? The market breaks this new low, then that means that automatically my eyes and thought process will end up saying that the market is going to end up going to right around the 151 area, or 152 area, before actually trying to see if it can make some type of a U-turn from there. Once again, we go back into history, we can see that this market, again, hovered right around 152 before actually making these new lower lows and going all the way into this area. So we're basically in the middle of it. I think that we're in a good position on this overall buy. If this market starts to push up and we start to see a little bit more, push for us. This one, does this mean that this will be one of those trading pairs that you can be able to get in and get out and get some profit for us today and stay in it for today? Not necessarily. I would say this is one of those ones where you need to start accumulating positions and allow the market to be able to move up. You don't need to bet the farm, but you do need to get into a position to where you can kind of bet kind of strong, so you can be able to ride this wave with this market being able to push up to 160. And then after that, retesting and then pushing up to 163. And if it gives you a little bit more push after that, then you can stay in and just allow the market to be able to go from there and be able to make its move from there. Hopefully that makes sense when it comes down to that overall trading pair. Let's take a look at some indices tradings. The indices market has been booming when it comes down to overall movements. And we talked about two pairs in particular. And we're only going to focus on these two. And then after that, we get out of here for today. Once again, if you have questions, once again, don't hesitate in being able to ask as we go through and be able to figure out what's actually going on. I'm going to go with the weekly and be able to take a look at it because we have a new week starting off. Remember, Sunday to Monday trades are the most important days when it comes down to trading in the indices market. It's not even close. So what do I notice? One, if we look at this from a long-term perspective, this weekly has a D extension that's expected to go up to 33,142. Look at this from a short-term perspective and see what's actually happening. You see that there's another mid-range right around that 32,000 area. So long-term profit areas, if we see that the market is still going up, will end up being right around this area right here, for us being able to get out. Everything else is somewhat of a warning area, and this being able to take a look at it. To me, this is a warning area if we start to see a lot of shorts come in, that if the market ends up getting to this area, you may end up seeing a strong push to the downside. All right, but from a weekly perspective, you can see that we're definitely in the sell zone. We definitely can see that we're overbought. Last week's candle was a basically a Pearson line candlestick that was basically inside, which means that we should see some more movement to the downside. Now, if I'm banking on what's going to end up happening at 9:30, when the market starts to open up and we start to see this market start to take off for its overall movement, I would say that I will look for more of a downside move. Now, where would that downside move stop at for me if I'm looking at where we go? There's two positions. The first one will end up being right around 28,000 for that overall position. The second position will probably end up being right around this overall area towards the downside, towards this move, which will be very close to the moving average. So we're talking about 27. So do I think that it's going to move down 3,000 points from this overall movement? Maybe. Not necessarily, but I think that it could drop off like that. I think that if we look at it, we can see that the parabolic SAR is finally done. We can see that the market parabolic SAR is right around 28,000 or right around 29,000 for the overall move. So we could see that actually happen for the overall drop. Take a look at it from a daily. What are we looking at? We see that this market has shown that counter trend line break. From a parabolic SAR perspective, we can see that starting off today, we haven't had that strong push towards the overall upside. So once again, if I'm looking at what's going to end up happening, if I had to make a decision on what's going to end up happening, I would say that the market will end up moving to the downside. Now, is there any type of way that we can be able to use our um, our volume profile towards the overall extent of being able to help us? Not necessarily, because we are at new highs. The only thing that we can look at is what's happening with previous price action to be able to see what's happening. Um, and that kind of goes back to this higher high right here, and basically this low, and see how the market basically end up touching itself. If the market's going to fall, it's going to fall down to this area. We're going to see the market fall. It's going to fall down to that area. So now I think I'm talking short term. I'm not talking long term on this one. I think that if it's going to fall, it's going to fall to that short term area. And if I am interested in being able to make any type of trade, it will be towards the downside, not necessarily towards the upside. If I'm paying attention towards that. So what does that bring us to? Let's take a look at the 2 hour. Let's see what's happening. In the 2 hour, if we're looking at being able to sell, we want to sell with a high price. Well, from this 2 hour perspective, we can see that there's a lot of momentum towards the downside. If we look at the ADX, you see that this market has not really gotten to a high zone for us being able to sell off for the stochastic. But we are seeing that this market has been using this 50 to 70 moving average as an area, or stochastic as an area where it kind of had that resistance on being able to fall. Okay, well, with that being said, what would I look for? Once again, we're looking for high prices. Anything that breaks this counter trend line break to the downside, that means that the market is bearish. We can see that market will end up going. We talked about a few different areas on where this market could fall, and we kind of broke that down in the short scalping positions. The first scalpable position to the downside will end up being at 30,500, which is about 300 points for the overall movement. A 300-point move off of a mini lot, $3,000 for the overall movement to the downside. Anything that you can be able to catch right here, we can see that there's a low volume profile for this market basically dropping, meaning that we're not going to end up seeing a lot of buyers try to be able to force themselves into that and be able to help out, at least from history, being able to look at this area. So market breaks this counter trend line break. I'm treating that very seriously, that this market will fall down to this, at least this first low, and be able to go from there. If it breaks below that, then after that, we'll look at right around 30,300 as the second area. If it falls below that, we'll look at how the market basically holds at 30,100 before falling all the way down to 30,001. Basically down to 30,100. So this market has a potential of falling down 700 points when it comes down to the overall movement long term. And if possibly we can see this market go back to that 29.9 area that we talked about earlier. Okay, so what does that mean for today? Does that mean that we're interested in buying today? No. Does it mean that we're interested in selling today? Yes. But I said it with a caveat. I want to catch it at a high price. I want to catch it when the market ends up breaking the counter trend line break. We can see that we're basically at a pivot area that we end up talking about on Thursday. That we felt like the market will end up falling down to this area and then going from there. We have the fall. Now we're looking for a retracement, and then after that we're looking for a fall again. Okay, if you're looking at being able to sell. Now we can do this to be able to see what's happening with the fibs. So we'll look at this overall movement right here. We can see that that was the start of a counter trend line break, or basically a ABCD swing where the market could fall down to 30,900. Okay. That the extension has not been fulfilled yet. 30,600 if the market falls down to that overall area. Okay. I want to take a look at one other thing before we move on from this position. I don't know if y'all can hear my son's stuff going on. Okay, so look at this overall movement. We can see that this market did complete its overall D extension. That's the reason why this market actually ended up going from there. Let me show you what that looks like. Give me 1 second so I can turn on my son's music real quick. Okay, so this is what I see. This market has completed the ABCD swing. So there goes your A, there goes your B. Your C was up here. The D extension just got completed. Okay. So essentially what ended up happening was that the market ended up making this type of movement. And second, I go through and I can be able to make some out of this for everyone. Market went from A, B, all the way up to C, where it went all the way up to the deep A6, fell all the way down to the D extension, which it just got completed at 30,651. Okay. Now, what does that mean now? We're looking at this next new movement. We should see that this market will end up having a retracement at this particular point. And now we can use these plot movements right here as where the market is going to potentially go. Now, what does that also mean? We can use point of control to our advantage on where I think that the market would go up toward the upside, and then after that, look at being able to sell if the market does push up to the upside. If I'm interested in being able to sell this, I want to sell this right around that 31,062 area. Matter of fact, I would look at being able to place in a pending sale at that particular point, expecting that the market could fall down to that area. Or if you're a little bit more aggressive, you can do two different things. You can say that the market is going to end up. Pushing up today as a way of basically retracing, getting all the way up to this overall area. Then after that, being able to sell down to this position, where this market could fall down to, which is the D extension of this market moving. Now, this is where confluence and this is where kind of experience comes in at. Because we just talked about how we looked at price action and we talked about where the market could fall for this overall price action, right? Just based off of looking at previous pivot zones and everything else like that. But me per trade, I'm a Fibonacci trader. So if we look at ABCD swings, we see that this ABCD swing ended right here in this area, or very close to this first pivot area where a previous high was at. Okay. Now we can see that this sequence is going to start over again and start to push up to the upside, and then after that start to fall again. Okay. Well, if we understand that, we can see that there was a lot of movement or a lot of confluence of pricing price action in this area right here. Well, if we know that to happen, then what's going to happen with the market? You see that the market is probably going to end up going up, selling right, getting right here towards this 618 area, and then falling down to the next zone where we think that the market is going to fall down to, which is 30,255. Now, I think that that is a solid plan of overall action of how to be able to trade this week going into next week. I'm interested in being able to buy. Well, I'm not interested in being able to buy. If I'm going to buy, I'm going to end up scalping the market all the way up to, and try to see what I can be able to get while the market is going up. If I can be able to get a low price and it makes sense to be able to do that. But I know if I'm really trying to sell, I'm going to try to sell right around 31,000. If I can get a sale at 31,000, then after that, I'm going to look to be able to get out at 32,255 if the market is going to continue to fall at the rate that it's falling. If the market pushes back up and the market maintains to be able to go, then we'll look at our long-term positions towards the upside. But if the market does make a decision on where it's going to end up falling down to the downside, then that is the area where I will look at being able to get out at long-term. We expect that the market is going to fall down from there. So I do like that plan. It's something to be able to talk about, be able to go from there when it comes down to making a decision on that. What does that mean for today? Today, is there a position to be able to get into? Should we look at being able to buy this overall position? Market is in the buy zone right now. We have a counter trend line break towards the upside. Should we look at being able to get in? A great question, and it's 8:40. Typically, we'll see the market movement at 9 o'clock, and that kind of give us a better example about what happened. If I do take a buy, my stop loss will be below this overall swing low at 30,750. I'll probably put it at 749 if I was going to end up selling. Now, I'm talking uber aggressive on this one. You don't necessarily have to take this for a grain of salt when it comes down to what you end up doing. My stop loss will be around right there. If I'm selling, I'm saying that with the caveat of if I'm selling. Right now, if I'm buying, I actually like to sell more than I like to buy. So my stop loss would be at 30,745. That'll be my take profit. Take profit, I will look at being able to trade up to the 2-hour point of control, which we talked about before, which is going to end up being at 31,050. Now, the question is, will something like that happen? Great question, but should you look at trading this? Once again, that's a great question. If you're unsure about this, you can do one of our advanced strategy methods. And for the people that are part of our boot camp and everything else like that, you'll really kind of understand and appreciate what I'm getting ready to say. Don't know, especially if you end up having a broker that allows you to be able to hedge. This is one of those situations where I would hedge the market. Meaning that I don't know what's going to end up happening. I can see that the market has basically fallen from this overall area before. You see that the market just hit a D extension, so the market should go up at least to 30,866, in which it did already. And if it starts to push up, then it's going to end up going back into this R1 area where we think that the market could go all the way up to. Now, based off of that movement, where could the market go up to? Well, we can see that the 618 is at 3,100. We can see that we have a lot of confluence of overall selling and everything else like that, where it got halted before at 31,050. I think that would be a very good area for us being able to get out at. And if we're looking at overall risk versus reward, we'll look at overall risk versus reward and say if we get in right here, we're only risking 105 points going after 220. So you're talking about a 1 to 2 risk reward ratio if that does happen. The market does move very quickly on this overall movement. Now, if the market falls, let's say for example, if the market falls, where would the market fall down to? Well, we already talked about where the market is going to end up going long term. We expect that the market is going to end up going all the way down to 30,255. That means that the market could fall down another 500 points towards this overall area. Okay, if the market does fall down, what would you place your stop at? Okay, well, if we're unsure about if the market's going to end up going up or down, right, then I would kind of keep my eyes on a 15-minute movement and give yourself a little bit of room towards the overall stop loss for us being able to hedge it towards the top side, and say that if this market will end up proving itself if it ends up breaking out of this overall high right here, 30,876. Which means that if you're risking it to the upside and you're saying that you believe that the market's going to fall instead of going up, then, and once again, giving away free game right here. Essentially, this overall area from here to here is your hedge area. I'm looking at a position right there. That is, I'm going to put this in, I'm going to go with this color right here. That would be your hedge area. I would essentially say that if I'm looking at if I don't know what the direction is, and I want to figure out what the direction is going to end up going to be, and I don't want to be necessarily wrong, you could possibly sit up there and take a buy and a sell right here at this position. I would straddle and say that my stop loss would be right there for sales. I would straddle and say that my stop loss would be right here for buys. and I have the position where I think that the market is going to end up going up to, in which I want to sell up here anyway.
Oh my gosh.
Everyone give me one quick second.
Oh my gosh.
I will look at
mine.
Yes, it is.
This is mine.
That's the position where I think the market will end up going to for being able to buy. Long term, if we're looking at what a position will end up getting out, for being able to buy, this is the position where I think that the market will end up going up to the upside today, short term. And then after that, I think that we're looking at being able to sell toward the downside. I think that will end up being a very good position, especially if the market is staying in the same wave that the market has been moving for the overall downside movement in the first place. So once again, if you don't know about where the market is going to end up going, you can look at two different things. One, I see point of control. If the market falls down to this overall position and if it breaks below 30,780, it's going to fall, and it's going to fall with force.